We saw a nice little uptick in gasoline prices last week, and here to talk to us about it is Dan Dicker. Dan, good to have you back.
Thanks, Joe.
So I'm sure that a lot of readers have been looking at stories about, oh, gasoline's up, and we even saw CPI come out on Tuesday morning that suggested that the rate, the inflation went up because of these gas prices. What can you tell us that's different?
Well, here's what's different. I mean, you could read 60 articles every day on gas prices, and they'll all tell you some fundamental reason why gas prices are going up. They'll talk about Egypt, the possibility of the Suez being closed. They'll talk about some refinery outage. They'll talk about some pipeline difficulty. All of this stuff is really secondary, and it has been secondary for a long time. They're the easy things to grasp. Now, what I talk about is I talk about what's been much more important in the rise of gas prices, and that's been the financial influences into gas prices. Remember that gasoline and crude oil are now financial instruments, much like stocks and bonds.
Okay.
And if you're not dealing, if you can look at the fundamentals, and the fundamentals in gas are clear. We've got more crude than we've ever had in our life, and we've got lower demand than we've ever had in a very, very long time. We're actually an exporter of gas for the first time in our history, and we have more crude coming out of the Bakken, the Eagle Ford from Canada than we've ever had before. We import less from the Middle East than we have in decades. Now, those are the fundamentals, and all those fundamentals will point to a low price. So if it's not the fundamentals that are driving gas prices, then it's got to be the financials. And I've talked about this with Jim, and I talk about it with you, and it's about gold, about oil being a new gold. It's about a new asset class that's being used as a diversifier, that is being used against a bond market that is gyrating, that is being used against the stock market that has taken some very deep dips and has rallied back. And all of these things have forced hedge funds, speculators, they've forced a lot of people into an oil trade. And that oil trade has pushed oil, obviously, from where it was in the low 90s, down we're at $106. That is a huge move. Now, what has that come against is it's come against a gas price that has stayed relatively low based upon a very low demand, okay? And so we had a very low price of gas. But right now, you have gas that's catching up to what's been a very long-term, or at least over the last 2.5 months, a long-term rally in crude. And what happens is that rack price finally catches up to what has been a very, very deep crude rally over the course of the last 2 months.
Why does it have to catch up?
Well, it has to catch up because in some ways they are connected. Remember, the input and the output are connected. Although they trade independently, they are connected. You make gasoline out of crude oil. So at some point, you have to have a catch up. You cannot let one entirely disconnect from the other. It just doesn't happen. It can disconnect for a while, which it had done. We had a very, very deep crushing in of crack spreads. But now at this point, when the rack price starts to move forward, you get that kind of catch-up move. So you get an 18-cent move in a week, which is really small considering that based upon the crude move that you had, you could have had a 30-cent move in a week, and I think that's what's coming. Anybody who thinks that gas prices are here only for a short term, I think are wrong. There continues to be more risk to the upside in crude, and that means more risk to gas prices going up through the summer.
So then those consumers who are a little worried about their gas prices going up through August and even into September, you think maybe the concerns are there?
Yes, and then of course with that on the table, then you want to talk about, and Jim will talk about, what that does to the retail trade, what that does to, the auto trade and so on. I won't talk about that, but I think for this, I want people to understand that even though gas prices have been increasing quickly, the risks, I believe, still remain to the upside. The financial risks remain to the upside. And therefore, we're going to see, I think, a higher gas price 3 weeks from now than we see today.
All right, Dan, thanks so much.
Right.
You heard it from Dan Dicker. He is saying that you should keep an eye. Gas is finally tracking up higher with crude. Many of you know that the crude prices have been skyrocketing in recent weeks and recent months. For The Street, I'm Joe Deaux.